Hello guys, after a long time I am streaming. Welcome to Nifty Alpha Trader. So I have tried to improve my camera in the first place. I'm using my iPhone camera. Right now the thing, I'm making a video right now because the markets are now stable. I have exited my positions and now I am trying to enter back with a few of my positions, but today we are going to discuss only about a single trade which I am taking, and I've taken it already, but what is the rationale behind it I am just going to explain, and later we are going to see how it's going to pan out and what will be the adjustments which I'm going to take for it. I'm not going to explain in depth of all the positions, but just this position because I'm keen over it. Let me just show you the positions now. Before that, I don't have much of a time, and also I want to explain it much faster. So here is a future build of the main thing is by the video's title or stream title. It is basically based on Ashoka Leyland. So Ashoka Leyland here, it has a clear, if you're seeing, it has pumped up like a lot, like 7% increase, and then it has stopped. So if you're seeing, it has a huge long build up at 7%, it has grown and that has paused. So there are huge resistance points here at if you're seeing at 120 and 110 zones again here, and since it has gone up a lot, and if you're seeing previously there was a short build up on third, there was a huge short build up on third which is on 110 range. So that is what is a future build range where most of the institutional traders are planning to take a good look here that it might go down, right? So we might not actually take a huge positions. Overall build up looks not extremely negative, but negative. But since it's a new long build up, if you are seeing the existing long build-ups of short build-ups which have already been made, they are not gone yet. So this is what makes it much complex to not go long with Ashok Leyland. Sorry. Now if you're seeing this, so the range I'm picking here is again the least of these ranges. If you're seeing here is 99.45, because it is already in a short build up range. I will be keeping it as 97.5 or something as that as a range. So this is what I explained, 99.4, and this is the future build up range. And if you're seeing now, if you see the option chart for this week, today it's going to be Friday, and yesterday till last Friday it was basically the entire formation happened here. It is at 110, and there are new build-ups which are happening in all the zones from 100 and 90, 100 here, 105, and if you're seeing also there are a lot of C's being sold and P's being sold everywhere, and there is a good support which is looking, but this is a good resistance, and it has been as a resistance zone. Doesn't mean that it can't be broken, but we'll be doing heavy adjustments after that. There is, before that, from 18th to 4th, there was a huge again if you're seeing here, there is straddles which were being created at 110 range, and 120 was a huge resistance. Now if we go further down the line, again here 140 was a resistance, and since then it was falling. So the view of them, whoever has shorted, they might have shorted it at 140 area. So I think that will be a strongest resistance for Ashok Leyland. But right now we have and if you're seeing now, even though there was a huge up move in the stock price, the PCR had a negligent impact. It didn't really impact such a huge way. It just moved up, and now after a single day without not much movement, it is back to normal, and this is being showing us the neutrality of the trade. So again, if we are going at the money, straddles it is 150, and if you are seeing here, basically it is the call puts are growing as well as the calls are growing here at the same time. Today both were going up. If you're seeing historically also, both at 105 are growing, so basically it looks like 105 would be a good uh, will be a good consolidation zone. And but this is all based on the market data. I am not seeing anything else. I'm just seeing the market data and analyzing based on the market data. And this is the P and the most of the P's, that P and C which was formed. If you're seeing 100 is a support and 110 is a resistance, both seem to be growing. So what happens here is, even though the IVs are raising, if the IVs are raising and if there is a consolidation zone, you will see increase of both the C and P's. So if you're seeing they have been constantly growing in OI since 2nd of March, and now they are at the peaks. And then now what would be the range? So based on our data, we are seeing that 110 would be a good range, and also based on the neutrality of the zone, and also if you're seeing, we have to be bearish because of the build-ups which have happened. So basically I stick with this trade. Okay, I'll just open it. It is basically right now it is in losses, and if you're seeing it is basically neutral in this zone. But if you're seeing a slight increase here, and the IVs right now, if you're seeing this IV, it is basically at 63.4, and if you're seeing the IV of 110C, it is at 54, and today is weekend. So if the IVs stay the same way also, but yet this decreases on Monday. We'll be making, if the IVs stay the same way also, we'll be making somewhat around 2000. But I don't think this will be the same scenario. Let's see where are the exit points. So right now I'm planning the exit points here at 107, which is almost there, and also taking adjustments there. So I'll be taking few adjustments when it reaches that zone, but not and keep moving according to the adjustments. When you're seeing here, there is a good movement which is happening right now. Let's observe even. So whenever this movement is happening, I have kept an alert which has to trigger, and that is when we are going to do adjustments. And now if you're seeing Ashok Leyland, so this put options which were written here are going off, and new call options are forming. So this is being the range, and there is one more range. If you're seeing also, call options have been written in historical way. And let's see the max pain. The max pain is still at 110, which is really indicating that it is bullish. We have to see few more parameters. So that was the alert which triggered, which says Ashoka might be, yes, Ashoka. So let's do the adjustment according to the move which it has done. So it has made a move. So what we can basically do is we can do one thing, which is sell this and sell this, which is here. So this is giving us again, if you're seeing 96 was a good resistance which we have seen, and also this range. Let's see if these prices are available, because this is at 1 rupee, which is not so good, but ultimately this is a resistance. If you're seeing, it has to be triggered once more. It is not just that it has to cross this with a good volume, and that is what we have to see in price action. I am not checking mostly price action, because price action shows an individual perspective, not the group perspective. Now if you're seeing here, it has been a downtrend, and now if you see, this price action is something like this. what can happen within this day is it can reach 110 and go back again, and this can be in the resistance zone, or if it breaks the trend line and moves back up, that would be a danger zone for us, right? So let it come to this range, and again, if you're looking this one, it came from 203 to this range, so it looks pretty volatile. The moves were really high yesterday. If you are seeing the move made around, okay, this is one day. Yesterday it made around 7% move, and then it made another 7% move up, but I ended up in the same range. That is what we are expecting. It has to be in this range bound. That is what is the real expectation. But since you're seeing there is also support here, and a 22nd of March, or when is the expiry? The expiry is on 30th of March, I guess. Yeah, 31st of March. So we have this range. So if you are looking at this again, it has gone back. So what I'll do is I'll again add this trigger. So if it crosses more than 3 times, that is when we will do the adjustment. If it crosses once, if it has to cross heavily, if it's crossing twice, I'll make that, and thrice, that is when we have to trigger. Otherwise we can just leave it like this. That's the main. We don't have to actively adjust something like these positions. So again, the other trades, I'm not going to discuss about the other trades. They might look at losses, but I have taken most of the profits away, so I'm milking them and presently sitting in some profits. But the main intention was to show this trade and what was the rationale behind it, and whenever I do some adjustments, I will make a live again and I'll explain to you guys. Thank you for watching, and have a great day. Bye.